Hey everybody, welcome back to Is It a Buy, where we talk about stocks and try to determine if they are worth a buy or maybe a pass. My name is Corey. I'd just like to preface the video by saying I'm not a financial advisor. I'm just a guy who likes to talk about stocks, so please take what I say with a grain of salt, alright? Let's get into the video. Today we were talking about ticker GRIL, also known as Muscle Maker Grill. Okay, so let's get into what these guys do. So what these guys do are they are another meal plan service. I've been getting requests, a lot of requests to cover this company, and so I figured let's go ahead and take a dive into them and let's see if we can make some kind of decision or help you guys come up with the right questions to ask to determine if you should be investing into this company. So, as you can see, they do the meal plans, the three-step process, pick your plan, they'll take care of the prep, and they'll ship it to you, okay? So, a lot of companies are doing this. They do have, as you can see, a huge assortment. They do shakes, they do, obviously, the meal plans, they have chips and snacks and stuff. So, it's a complete service, which is pretty great, especially if you can have everyone doing everything under you, and they can get their complete package. This way, they're not trying out other companies, and if they try out other companies, maybe they like them better, but we'll have to see. So they do have a rewards program, which is typically pretty nice. Their website here, as you can see, nothing too bad, nothing too special, but very clean and easy to use. So let's take a look at some of their, so it's pretty simple concept as far as what they actually do. We can see meal plans. So let's kind of jump into a little bit of the meat and potatoes. So taking a look at the press releases. So let's see what they've been doing recently. You can see nothing too recent. Looks like in early January, it says Muscle Maker Grill aggressively moves into direct-to-consumer prepared meal plan market. Now, as we know, there's a bunch of different companies that do this. So if you're thinking about investing in this company, what makes them different? What makes them better? Is it their pricing? Are the meals actually healthy? There's all these questions that you need to make sure you're asking yourself. Something that's interesting here is they are, a franchise, so you can go ahead and franchise the store. And it looks like they are working on growth. They are willing to expand and allow people to grow, which is fantastic. So if you know me, I like to take a look at a little bit deeper than just a surface level. Okay, how are these stores actually doing, and how are people perceiving them? That's a big question that you need to make sure you're asking yourself. So what I did is I went ahead and went to the locations, and I just kind of Googled all of their locations to see what people are thinking. So taking a look here, you can see, and again, I just literally Googled them, and I want to see how many Google reviews and other kind of reviews that I can find. So this store over here in New Jersey does have 210 Google reviews, very, very nice, and it's 4.3 stars on Google, which is fantastic. And so you not only want to take a look at that, but how are they doing on these other sites? So I haven't really heard of this one, but it does seem to be pretty popular. It pops up on a lot of searches that I've been doing. So you can see here it is rated 3.6 with 94 votes. So the more votes, the better. Obviously, you want to get a good feel of how people are doing it. 5 votes, even 10 votes. Sometimes that could be friends and family, and it's really hard to tell. Even the staff sometimes, so hard to tell. But, with a good amount of votes, it usually gives you a pretty good picture. So Foursquare.com, you can see it's 7.9 stars out of 10, and Yelp 3.5 out of 5, and that's with 70 reviews. So that's how this store is doing. How about the other stores? So this store over here, this one's in New York. This store has 134 Google reviews with 3.9 rating. And over here you can see Yelp. It's actually 2.5 stars with 76 rating, and 2.5 on. Oh, this is Yelp again. So you got to kind of take the good with the bad. You want to be unbiased. You want to say, if I was going to go to one of these restaurants or one of these grills, and I saw that rating, would I actually go to it? Would I even give it a chance? And that's something you have to ask yourself. I have heard people say, it is very delicious. I personally never tried it, but things to consider. Make sure you're asking yourself these questions and you can answer them. Here's another store here in New York, and you can see this one is 3.6 stars with 84 Google reviews. On Yelp, it is 3 stars with 48 reviews. So not the best with some of these stores. And again, that's the thing. Whenever they're being franchised, obviously they want to put their best foot forward for everyone. But if these other people who are franchising, if they can't do a good job, it could mess up your brand, just your brand in general. And you can see here, this store over here in North Brunswick is 118 reviews, 3.7 stars. So you kind of get the gist of it here. So something to definitely consider. I tried to take a look and see if I could find 1 year target estimates, but unfortunately, I really couldn't find anything on any of these sites. And these are the popular sites: MarketWatch, Yahoo Finance, and even MarketBeat. I don't think MarketBeat had one, but I did try to look up the institutional ownership. I am a huge fan of large institutional ownership. I don't think these institutions are dumb. They like to put their money in good plays. And as you can see here, there's a bit of a discrepancy with some of these, and that could be because of the dates that these were updated, but this one does look pretty updated all the way up to February 24th of 2021, so relatively new, and it's only 0.21% of institutional ownership. Now on Fintel, it is a little bit different, and this one shows 7.62%, and you can see that this one is actually very updated because there is the new, there is the 3-1 date, so just earlier in the month. Taking a look at NASDAQ.com. So on NASDAQ, you can see that their institutional ownership is also 7.60, which is right on par with Fintel. So this may be the most up-to-date information. It does look like there was a newer investor over on. Even then, taking a look here, you can see that this was not updated for 2021. This one being updated in 2021, you can see that there was a new institutional. Oh, actually, no, I'm sorry, I misspoke. So you can see it here. So interesting stuff, very, very interesting stuff about who is actually invested. So make sure you're doing your due diligence there. We can also take a look at their financials. Let's see what they're doing annually. So annually on their gross profit, it looks like they have been on an upward trend recently in 2019. It does look like they had a bit of a dip. Now there could be a few different reasons for that. You really need to make sure you're checking out their financials and seeing if they're investing elsewhere. Off the top of my head, just taking a quick glance at this, I don't see anything that's really standing out as far as what they are trying to spend their money in. Okay, now they could be trying to invest in themselves. And if they are trying to invest in themselves, that would make sense that their gross profit would go down a little bit, and in order to make way for the future. Okay, so you really want to take a look at these numbers and see what's going on. Something that's standing out to me as I'm glancing at this is their other non-operational net income is down by 20 million, whereas previously it was positive by 96,000 and 88,000 and 6,000. So something to keep in mind there. Quarterly, let's see if we can see anything a little more microscopically. And here we can see that it has their net profit was going down, meaning it was becoming more profitable. However, in this last quarter of their quarter 3, it did kind of it went the opposite way that you want it to. But again, are they investing in themselves? It seems like they may be doing that, but you really need to take a deep dive at the numbers to see if that's what you're seeing. As far as the institutional ownership on here as well, it does look, it was last updated on the end of 2020, so nothing new for 2021, but we do see the ownership here at 7.60%. Something else you want to be looking at is the news catalysts. Are there any news catalysts that are going to put these guys on the map? Is anyone promoting them? Are they on one of these shows? They could be on, I don't know, Dr. Oz. They could be advertising on TV. Anything like that could really, really help them, help propel them. Now, taking a look at their chart, let's take a look. This is their 3-month chart, and we're seeing this with a lot of companies. A lot of companies had a huge run up over here, and then they dipped. And as they dipped, this is okay. I'm okay with seeing a huge run up, get a lot of hype, and then they come back down. Excuse me. So what you want to see here is, okay, they consolidated, right? It looks like they're starting to consolidate. They may have found a bottom around here, and hopefully they continue to move either sideways, or they continue to increase with their the price of their stock. The question is have you done your research? Are you able to say, yes, these guys are penetrating the market, they're better priced, it tastes better, and they're continuing to grow? And if you can give me all of those points and say, yes, this company is going to be good because of XYZ, then this may be the company for you. This may be a great spot. And again, with this hype and then the consolidation, is there going to be another news catalyst that is going to put them on the map, that is going to give you another spike? Even if you just swing it, that could be a great play also. But you're going to want to make sure that they have all of their ducks in a row to make sure that they are going to hit a grand slam. Okay. And that's what I have. I just wanted to bring this to people's attention. I want to make sure you guys are asking yourselves the right questions to see if you want to buy in the stock. Is it an actual buy? I think it has some potential if it has those catalysts. Me personally, I'm probably not going to take a stake in this company at this time. But if I can talk you out of taking a stake in this company, maybe you should not have taken a stake in this company or take a stake in this company. But always do what is best for you and your financial goals. Okay. Thank you so much for taking the time to watch this video. If you did like the content, please consider subscribing. I'm doing my best to cover all of these topics, all of these stocks that you guys want to see, and I'm really trying. So also, if you guys wouldn't mind dropping a like, that really helps me with that YouTube algorithm and getting these stocks seen. If people don't know about it, they can't invest in it. Okay. Thank you so much again for taking the time. I appreciate you all. Have a good one. Peace.